morning. It is Tuesday, October 3rd, and if you are not part of the the Facebook group, I wrote an AI. I had
artificial intelligence
AI,
write this song
write a song for me last night. I was sitting there, I was doing nothing, and essentially I said, you know what? Let me check out this AI stuff. And I was doing a bunch of stuff. I've been trying to use AI to increase my research time and things of that sort. But I wanted to take a look at it, and so
tune in.
Here's the song.
Good, I think.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading.
Go over to YouTube, or you can just wait, watch the recorded stuff. It's cool. I mean, listen, I was impressed, overly impressed. I tried to do a video. Maybe I'll release the link to the video in the newsletter, but the reality was the video was horrible. It was this horrific melting of my face into a horror scene. It was bad. I mean, it was just plain bad. Let's talk about the heat map yesterday from SPY. Big tech was the winner. Microsoft up 1.2, Apple up 1.8, NVIDIA up 2.95, and we'll talk about NVIDIA, a new price target on NVIDIA. Clearly, energy down here on the bottom right, energy utilities was just killed yesterday, by the way. Absolutely destroyed. That bright red down there, you can see some financials were bright red. Insurance was absolutely destroyed. Diagnostics, TMO and DHR, Danaher, just absolutely destroyed yesterday. So, Target down 3.51%, again, destroyed. But let's take a look at some of the stocks. The reason these stocks are going down, by the way, is yields. Yields are going up. And if we go over to Fidelity and we look at this, the U.S. Treasuries right here, you can see 3-month 5.51, 6-month 5.55. The 6-month is the highest, but it's damn close. It's 0.01% away from 1 year. Now you get to 2-year 5.17. 3-year, you get out to 10-year and you're still at 4.7 times. You are still inverted from the curve. So when short term is longer than long term, is higher than long term, I should say. Hold on 1 second. Dog is crying. Man, disrupted within 5 minutes. She needed a new bed. But when the short term is higher than the long term should be higher than the short term. You should be getting paid more for holding, for them allowing you to hold your money for a longer period, blah, blah, blah. But remember, bonds everybody's saying bonds right now, the 6-month is the key. What's also happening is the price of these is going down. So as the bond rate has been going up, the actual asset goes down. So there's a kind of divergence there. I still am not in bonds. I am accepting the 5% that Fidelity is giving me through U.S. Treasury bond, where I have access to my money. I'm not buying these bonds just because I think the prices of the assets are actually going down. I'm not 100% sure. I'm not an expert in this. I'm just kind of sticking true to what I know, and I'm not willing currently to risk it. You can see there's all of these U.S. Treasury bonds. I don't even know what this brings up. Let's see. There we go. Treasuries are debt obligations issued and backed by the faith and credit of the U.S. government. Because you are considered to have low credit or default risk, they are generally offered lower yields. Reason 2, tax advantages. I mean, that's the biggest thing is the tax advantage. So, but that's the reason why stuff is going down. And if we go to 5% on the 10-year, I think it's at 4.7, 4.8, somewhere in that neighborhood. The danger is that this market will go down significantly. It might go down to the October lows of last year of 3,600 on the S&P. But you can see we're in a slide. That's bad. But as I highlighted the other day, we had a MACD cross up. And you guys know my algorithm is based on MACD, and part of it is the MACD cross up to get in. And we had an entry yesterday, 427.36 on SPY. You're trading at 425. It's continuing to go lower, kind of just like yesterday. We started up with the futures, and then you just got dragged down. So SPY is kind of like that. Now, what I do want to point out, I pointed out energy. Energy was down yesterday. In my mind, and I think a lot of people's mind, buy the dip. I mean, PXD, for instance, PXD pulled back almost to the 200-day. The 200-day is at 219. You're at 224. It got you out with a loss. This buy-in here at 233 got you out with a loss. I would not listen to the algorithm on this. I would look for entry points, not exit points. PXD has a really good dividend. We're looking for, when they announce their earnings, October 26th, I'm looking for the price of oil and everything, that energy that's gone up. I'm looking for another special dividend. That's what I'm waiting for. PXD, I like. Now, would I buy it here? I'd probably wait a little bit, but anywhere between 200 and 220, I don't think that's a bad entry point. If we look at long term on PXD, it's definitely high. I mean, it's that's COVID. Right there is COVID, where oil went negative and you were at 87. Oil went negative and you were at 87. This right here is June of 2022 last year. Oil was $120. If we get back to $120, you're at $280 with an 11 to 20% dividend. Because what they're going to do, they're going to return the cash to shareholders. Look at how high that was, how fast it came down on the MACD. Didn't come down in price. I'm sitting here holding. This is a great company with a good company, with good management, with good earnings, and a good product. Argue later if oil's a good product, but it's in your everyday life. You'd have to really, maybe Ted Kaczynski, the Unabomber, maybe he didn't have exposure to oil because he lived in a cabin in the woods and hunted and stuff. But yeah, everybody's got the shoes on your feet, the rubber that's made in the insoles, that's oil. Yeah. So unless it's like vegan stuff, I think they don't use oil in vegan stuff, but I could be wrong. Again, Chevron, you're looking at a little button hook like we talk about all the time. You're looking at the MACD crossing down, the RSI at 46. I don't think you're going to 180 on this one, but could you? Absolutely, you could. I think 150 to 170 is probably your happy range in this. 166, kind of sit back and accept it. Exxon, we talk about Exxon. Would I buy MPLX? One of the questions the other day was, hey, MPLX, it's been a solid dividend play. Would you buy it? I don't think I'd buy it here. 35 to 38. I think it does get back to 38 with a solid oil price. But I don't know that I necessarily buy it there. I think there's better ones. Oxy is a good example. Oxy pulled back to 62. I say anything under 60, buy this one. Anything over 60, I think you can absolutely sell it. You can see the 200-day is right within touch. It's 61.31. In pre-market, you're at 62.10. That's a great one. We can go down here and look at Exxon, which is the other energy in the core portfolio. Exxon at 115. Talked about trimming this one at 120. It's turned over a little bit. Am I getting rid of it? No. Trimmed a little bit at about, I think I got it 116, 117, somewhere in that neighborhood. Trimmed a little because I saw it turning over. The MACD is on its way down. Hasn't gotten you out. The algorithm hasn't gotten you out. But one that you might want to look at is MPC, Marathon Petroleum. If you are a TrendSpider subscriber, I've got a full list of oil that you should have gotten in your welcome letter. The energy names that we trade. It's a daily stock pick, energy names to trade/own. And this entire list is made up of energy names that are good companies with good earnings. Most have good earnings. There's uranium in there. There's lithium in there. There's a lot. There's coal. There's a lot of stuff like Rig. We talked about Rig being in a $10 stock. It's at $8 right now. It got you out, but I don't think that's a horrible price at $8. It's a $10 stock at some point in time this year. Do you wish you would have bought it down here at $6 when it got under the 200-day? Absolutely. But, we can't all kind of load into that stuff. Now, I think there's two names for natural gas. CTRA, CTRA. I like this one for natural gas exposure. I was looking at it last night. The chart's interesting. I don't know that I'd buy it here. I'd wait for it to get under its 200-day. It's kind of crossing down there. And again, we might have a weekday in energy. So this would be an opportunity to buy. But CTRA is one that has a decent, we can go over to FinViz and look at the fundamentals of CTRA, CTRA. It has a $19 billion market cap, making $3.1 billion. PE is 6.63. Forward PE is 9.55. A little bit high. Dividends 4%. So you're enjoying a 4% dividend while you're sitting there waiting. Year to date, you're up 8%. Your 52-week high is $30. That just came in. You're trading at 26, and the 52-week high is $30. You're right in the middle of your range between 22 and 30. The 52-week high, you're 14% away from. The 52-week low, you're 18% away from. The average target price, $31.88. Most recently, August 14th, Piper Sandler upgraded them. $35 price target. June, JP Morgan upgraded them. $33. They brought it from 33 to 31. Big deal. You're trading at 23. So CTRA is one that I do think could pose an opportunity. You do have some sales here. They are fairly big. I would be slightly concerned. This dude's selling about $13 million worth. He's a director, Dan Dinges, but maybe he's just buying a house in France. Who knows? But the other one that I wanted to look at from natural gas is LNG. And so LNG, there's two. We do have Devon in the core portfolio, which I'll take a look at. That Devon just hasn't participated. We've talked about that one. I've charted it in Seeking Alpha. But LNG, Cheniere Energy, these guys basically load up cheap natural gas in Louisiana and Texas and ship it over to Europe. In a cold winter, these guys will be able to print money. Print money. You can see it went from $22 to $5.61. It hasn't really gone anywhere with the earnings kind of just coming down. Their earnings are coming out, I want to say, it's October, at the end of October, beginning of November. But there's some energy names for you. After releasing their September deliveries, here's the EV update. And I missed this yesterday for some reason. I just wasn't paying attention. Chinese EV makers like NIO, Li, XPeng, and BYD all met or beat expectations. In the U.S., Rivian topped expectations while Tesla lagged. Now, Tesla lagged, and the reason was they were retooling their plants in both China and Texas. So it was totally expected. It didn't have a huge impact on the stock. Rivian, on the other hand, they met and they were down about 1%. I continue to say it's a $30 stock at some point in time. Doesn't mean that it's right now. Rivian, highest average vehicle price. They don't have subsidies because it's too expensive. It's a little bit of a risk. It is an expensive stock. If we go over here to FinViz and we look at Rivian, Rivian's PE, they're not making money. They're losing $5 billion. They have plenty of cash on hand. There is no problem with a dilution here whatsoever. Their 52-week high is $37. They're 36% below that. Their 52-week low was $11. Don't you wish you would have gotten it at $11? It's 102% up from there. Year to date, 28%. You can see the average target price is $28.59. I think with hype and some type of Amazon vehicle, or maybe they get UPS or FedEx to grab some vehicles from them, I think you see this at, there's no huge sales here. Look at this. I mean, November, $271,000. Nobody's getting out of this stock from an insider standpoint. Everybody's staying in. So Rivian, I do like. Tesla, I like Tesla as well. $249. I've said it. I think anything under $250, I think is a good price. $250.32 is the cross up today. It got 250.32. Yesterday it closed at 251.62. You're trading at 249. I think anything under 250, you're fine on that one. Apple. Let's talk about Apple a little bit. Apple was up yesterday. 1.48%. It was up yesterday. Interesting one here. It got a cross up at 173.31. It also got a bit of a downgrade. It's no longer the top pick at Citi for their tech. I think Google is now their top tech pick or something. But that downgrade, I mean, their target price is still $199.93. I don't see the Citi downgrade. It'll probably show up later at some point. That smart investor. 3 things to know about Apple that smart investors know. I mean, there's some great news stories on Apple out there. Better buy Apple or Amazon. You can take a look at some of these on FinViz. I'm staying long on Apple. I'm not trimming here. I am most likely going to buy a little bit more here. I typically buy with the dividend. I think I get a couple $1,000s in dividends, and I just automatically reinvest it. But at 173, here's the thing. It's expensive. It absolutely is expensive. We can take a look at the PE. The forward PE is 26. You're paying 26 times earnings for a company that's not necessarily growing. And that's the issue with Apple. There's issues with China. There's issues with the iPhone 15 overheating. There's issues with, is the Vision Pro going to be big? Is the car even still in existence? Do they still have an Apple car out there? You've got big issues here. I'm not too concerned. I think at the bottom, we probably get to about 165, 166. At 173, if I'm holding long-term, do I care? No. When it goes up here to fill this gap at about 190, am I upset that I bought at 173 instead of waiting for the bottom at about 169? Nah. Depends on how many. If you're buying millions of shares, yeah, that's going to make a difference. So dollar cost average your way in. If you're buying 10 shares of Apple, or if you're buying 100 shares of Apple, say you're putting $17,000 into this, dollar cost your average your way in. 173 and 169, just buy it. I mean, again, I'm talking my book. And I did listen to the Seeking Alpha podcast yesterday. I was not overly impressed. My thought was that dude, Chris from Substack, he wrote to me and asked me to listen to that one. I was not impressed with, I thought he talked his book too much. Part of the reason was the energy portion of his presentation. He made mention that windmills were killing birds, and it wasn't like offhanded. This dude was pretty serious about windmills killing birds, and that solar is slave labor, pulling materials out of the ground, and that oil was the best investment going forward, and coal and oil. Because we were going to be relying on coal and oil for cheap energy, and he wanted government policy to switch that. That's talking your book. That is 100% talking your book. He wants administrative policy to bump up his own portfolio. So I was not super impressed, but I stick by my story yesterday. I don't know that I would trade that cannabis financial stock. I don't think I'd own it. He didn't convince me that I need to own that one. I just think when the HHS gets their act together and classifies it as just a regular drug or whatever they're going to do, I think there's too many big players that are able to step into that realm of financing. And is a shop owner going to go with a large player, or are they going to stick with the small player? I just think there's definitely a better option out there for leverage. So let's talk about NVIDIA. The KeyBank came out, new price target, $750. NVIDIA here, we go over here. It is super expensive. 108 is the PE. Forward PE is 26, but the average target price is $654. August 24th, $600. August 24th, Exane BNP Paribas, $745. Look at August 24th, Rosenblatt, $1,100 price target. I do think that these guys got a little crazy with the valuation. One that I would look at, and I would see, and I wanted to bring this up yesterday and post the chart. I didn't, is SMCI. It's closed at 288 yesterday. I told you it was going to start to fill that 300 to 350 gap. We'll look at that. This one, it's 19% below its 52-week high of 357, which was back here in August. You can see it. If you don't even have a charting software, just go to FinViz. It's completely free. Look, the forward PE is 13. The forward PE on this is 13. I've gone over this way too many times. This one, in my mind, pounding the table on this one. If you're going to invest in NVIDIA, put SMCI in there. Just put it in your portfolio as well. Like I said, this is, 26%. You made half of that yesterday. I mean, you went up from about 260 something yesterday up to 288. You're starting to fill this gap. That gap fill starts at 300. When you start to fill it, it should start to fill at least halfway. I would sell if you're looking to trade this one and not necessarily own it. I actually own it. I'm going to own it for the long term. I am investing in this one. I do believe that these guys make a good, the algorithm makes you 445%. Buying and holding this one for 2 years, you're up 682%. These guys seem to have come out of nowhere, but when you actually do the research on it, you can see. And you still have, yesterday we were talking about a 30% to fill that gap. I don't think it's crazy to think that this one's going to 400. What's the average price target? Let's see. The average price target on this one is 364. 364, and you're trading at what? 280? Yeah. I like that one. I like that one a lot. We talk about TrendSpider alerts all the time and how you don't have to sit there and look at charts. I did this live on the air the other day, and I said, you know what? Tell me when Netflix has confirmation. And I say this all the time. Netflix confirmation is when the actual price closes above the 9-day. It broke through. So I got an alert yesterday in the afternoon that, hey, Netflix broke through. We had a buy here at 375. It broke through at about 380. That's where it broke through. It's trading at 377. Interesting articles on Netflix about, I was reading on Seeking Alpha, is whether they're actually playing some accounting games. But if these guys announce, hey, we just saw the revenue from our password crackdown. If they announce it on October 18th, expect this one to go up and fill this gap up here. And that gap is between 450 and 472, created by the last earnings. At the very least, I would expect this earnings. You just had this death cross, which means I'm very hesitant, super hesitant to add to this one. But that little trough right there, you're under the 200-day. You don't trade under the 200-day on Netflix for very long. And so do I expect it to come back up? Look at the weekly. You're kind of playing with that 200-day. You're getting over it. You're getting under it. You're getting over it. You're getting under it. But if we see that 50-day move up on that 200-day on that weekly, that would be a bullish move. I'm not getting in right now. I'm kind of waiting for some stuff, but I do think at some point in time I'm going to get in. Two things that I wanted to show you was dive into dividend. 14 must-have stocks when markets dip. This was a pretty good list. Got to be honest, I'm not a huge dividend. You guys know the bigger the dividend in my mind, either they're not reinvesting in their property or it's an energy stock. I mean, dividends, energy stocks are just paying out the dividends, and not the biggest issue with some of the energy stocks is when they actually buy back their own stock or give dividends. It just goes back to the shareholders. That's what you want to own. But I was noticing this has 14, this article, and I'll post it in the newsletter. It has 14 stocks. Now, what I don't like about the author is they listed everything as one. So formatting issue for me, big lack of attention to detail. But the Marathon MPC, I like this one. Forward dividend yield 1.94, 3-year growth 9.74, dividend growth rate A+, strong buy. And all of the reasons that they give here, I actually believe in. Phillips, PSX, is another one. The forward dividend yield 3.4. I like that one. It's an energy name. Northern Oil and Gas, 3.74. I like this. Caterpillar. I've owned Caterpillar in my Webull account. If you're not part of Webull, what the hell is up with you? Use the link down below. Get some free stocks and use the trading software, the desktop software. I like their desktop software. I don't use it. My computer's just slow. But yeah, there's some really good stocks in here with some really good dividends. And there's small caps and big caps. Cogent Communications, 5.94%. This article is really good on Seeking Alpha. I like this one. I thought it was a good article. There were some new stocks that I didn't know about. Year to date, many dividend stocks are beaten down. I have 14 picks with an average yield of 3.74 versus the VIG, which is the Vanguard dividend index, yield at 1.99, and SPY dividends at yields at 1.53. So I like that one. That one in particular was a good one. This one's interesting too, and it goes on dividends. And what I'm finding is a lot of people who write about dividends on Seeking Alpha really take it in the comment section. But this was an interesting one because it's a dividend growth portfolio. So he identifies exactly which stocks he has in his portfolio, how much he's up. Let's see, in 2021, chased mediocre deals, with cash safely earning 5% and no risk to capital. I can hold cash for 3 to 4 years. Portfolio goals, portfolio guidelines, current holding. I mean, he's got a lot of stocks here. How am I doing so far? The yearly income growth is close to 11% if I include interest income. Since it appears that cash will continue to provide a decent yield, I'm determining how to incorporate this income in my reports and probably will begin next year. He is projecting dividend growth of 7.7% for this year. It's below his goal of 10%, but here's the increases. Honeywell, Lockheed Martin, Philip Morris, Texas Instruments, Microsoft, Starbucks. October's expected increases from yesterday with Scott, AbbVie, A.O. Smith, Visa. In fact, Visa has a cross up today. Sales in September, purchases in September. He goes over everything. I like authors that do this. He just got destroyed in the comment section. So I like this one. I like his article. I like this. I'll include it in the newsletter if you want to read it. Let's talk about scans. Because that's all I have. Amazon crossed up. We have a buy in Amazon. There's a great, like I said, if you go to Apple on Finviz, there's a good article, Apple versus Amazon. Which one should you buy? You're under your 200-day. You're just crossing back up on it. 129.46. You're trading at 128.31 in pre-market. Grab it. I think this gap at some point in time between 132 and 134 gets filled. I don't think it's crazy to think that that's a stock that you want to hold. And again, under 130. Apple at 172. The cross up was at 173. So I think you hold that one. In the core portfolio, XLY, which is consumer discretionary. This one is held up completely by Tesla and Amazon. The two. That's what's been holding this up. The rest of the stock's complete junk, but Apple and Amazon make up a huge portion of XLY. And XLY 160.91, you're trading in pre-market at 161.11. So 160.91, that was the cross up. CRM, which is Salesforce. I like Salesforce, and Salesforce has been trading really between 200 and 220 for quite a while. You can go back and let's look at a weekly. 203.71 is the cross up, by the way. If we look at Salesforce from a weekly standpoint, you can see right here, January 2023 is at 141. Since we started getting investors, this was April, where it was at 197. And you just made a round turn trip in this one. I think you move it for a leg higher. I don't know that I'd necessarily buy at this one. You know, the RSI is a little bit high on the weekly at 48. The MACD is kind of crossing down. It's not a bad time, but CRM is pretty expensive. I do own this one. I do not have it in my core portfolio. The reason is because of the expense. The PE is 227. The forward PE is not horrible at 21, but if they miss on earnings, man, that's a horrible one. The average target price is 257. So at 203, not a bad play. PayPal. I am still holding PayPal. I am getting destroyed on PayPal. This one has a cross up and it continues its leg down. 58.62. I continue to hold this one. I continue to think that the new CEO will bring about some changes. The biggest issue is the margin, and that's the hardest one to actually get. But PayPal, I 58.62. I'm not adding more. I'm waiting for some type of confirmation over that 9-day. That is significant. I'd rather buy. Let's take this August run for instance. August 21st, $59. Right there. I waited until I think 61 or 62 to buy. And I've been, I was pleasantly surprised when it went up to 66. I thought it was going for this gap. Didn't go for that gap. Got rejected on the 200-day. You've got a cross up here and the RSI is down. It's just been beaten up. It is pretty inexpensive. Another one that's inexpensive, but another one that I think is risky. Stock market nerd Brad Freeman is going all in on this one. 81.25 is the cross up here. The RSI is in no man's land. It's Disney, DIS. I just think there's too many issues in Disney. I would wait till the next earnings on Disney, but there's a ton of reports out there that they are talking with Comcast. I think Comcast has the better end of that one about acquiring Hulu. I just don't know that Disney Plus with putting that content on Hulu does anything. So next one, Tesla. Tesla here, 250, 32. I think anything under $250, you're at 248 in pre-market. I think that's a good buy. Okta, let's talk about Visa. Visa is one that, they're kind of getting into the payment space with PayPal and Square and stuff like that. 231, I'd like it closer to 200. It's expensive here. I don't think this is a bad play for Visa, to be honest with you. I just think they continue to go up. Their fees are incredibly expensive. You can look at the valuation of that one, but I'd like it closer to 200. That was where I was trading it before. I've been since out of it, but Lululemon, they struck a deal with Peloton. They used that 200-day as a bounce up, 384. Lululemon, I think their average price target is around 400, if I'm not mistaken. It's a crazy valuation for Lulu. PE for a clothing brand is 48. Forward PE is 27. Their average target price is 444. Most recently, September 20th, Needham buy at 470. September 18th, HSBC buy at 500. I think Lulu's a quality name. I'm not buying their pants. I know people who are, and they are the 1%. So that's what you got. Charles Schwab, another cross up. I think this is a $60 stock. It's at 53. This one had a cross up here. The MACD is just floundering. Got you out of this $55. It's at $53.20 in pre-market. I like that one. Some of the covered call ETFs I'll include in the newsletter. Levered ETFs that got a cross up, because we talked about TQQQ yesterday. UPRO, which is an ultra pro of the S&P 500. This one would be SPY, 41.12. And that MACD is pretty low right there. The RSI is pretty low at 36. 41.52, you're trading in pre-market at $40.27. I would look for probably just confirmation on this, because I do think that at some point in time you come back up here. I just would wait for this one to actually have confirmation. Again, it's a triple levered ETF. SMDD. This is, I think, the Russell, if I'm not mistaken, or the mid-cap. Ultra pro of the short of the mid-cap. This has been running. It's got another leg up, SMDD. We've been running since $17.80. This one's at $20.12. So SMDD, SPXL, which is the bull of the S&P, same as UPRO. It's got the same exact chart as UPRO. 78.15, so it just depends on which one you want, SPXL or UPRO. 2 Vanguard ETFs, VWO and VTI, and sectors XLY and XLG. XLG is the top 50. And I like this particular one. This just, talk about the Great 8, the Magnificent 7. Yeah, XLG. So if you heard anything in the podcast that you like, subscribe, hit the like button, whatever you want. Go to Linktree, linktr.ee/daily stock pick. Sign up for TrendSpider. You got a special offer. Get my 4-hour algorithm. Sign up for Seeking Alpha. Get $50 off. Sign up for Webull. You get free stocks. Put $3 in there. They'll give you free stocks. Sign up for the newsletter. Visible, if you're paying anything more than $25 for your phone bill, Visible right here. And you get $20 off your first month of service. If you are buying the new Model Y at $43,000, crazy cheap car at $43,000. I can't believe how cheap that actual car is. It is the best-selling SUV, family vehicle crossover. I'm sorry, it's best-selling crossover vehicle. Model Y best-selling sedan is the Model 3. You can get either one of those. Use my referral link here. You'll get $500 off. Plus, you'll get 3 months of full self-driving capability. Full self-driving is great on the highway. Not a big fan in the city, but you got that. You got Facebook, X, Twitter, Instagram, YouTube, whatever. Look for today's edited video with the new AI theme song on there. So I'll include that. Okay, you guys. I will talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.